Diversification.
So here's the latest this morning. Chinese AI startup DeepSeek's sparking concern over US tech dominance. Nvidia set for its biggest market cap drop on record if the current move holds. Jim Bianco of Bianco Research writing, "We start the week worrying the Mag 7 technology is outdated and slow, thanks to DeepSeek. And while you can argue that it does not impact the S&P 493, Russell 2000 or the broader economy, it is a big market event." Jim joins us now for more. Jim, welcome to the programme, sir. First question, is this a big game changer?
It's a game changer for the Mag 7 stocks in that they're going to have to rethink what their, capex spending is going to be, and maybe even where they're going to go forward from here. Is it a big game changer for everybody else? Is it a game changer for the economy? No, it's not. But the Mag 7 stocks are 34% of the S&P. So if Nvidia's got a problem, maybe people get up and go to work and they don't have to worry about their job. But anybody who owns anything that is related to a broad base of the stock market, they have got a concern because of the dominance that these stocks have over everybody's investment returns.
Jim, there are a lot of questions about exactly how far DeepSeek's innovations can go in terms of really transforming to the negative NVIDIA's prospects. There is a larger takeaway, though. From your perspective, what does this say about how concentrated valuations got over the past year?
It's a direct mark on how they've gotten so concentrated in that these 7 stocks, as much as we like to talk about the economy and the stock market and investment ideas, we're all tied to these 7 stocks, and in particular, we're all tied to NVIDIA. And whether or not you actually even know you own it or don't own it, and even if you don't own it, this morning witnesses, it impacts not only your stock investments, but even the algorithmic response you're seeing out of the bond market with the big rally because the stock market is down a lot. So it matters to everybody, even though it may not change the economic or fundamentals underlying some of the assumptions that they had just on Friday.
Well, Jim, to that point, when you talk about algorithmic read-through to the bond market, is that really what you attribute some of the rally that we're seeing this morning in U.S. Treasuries? Or do you think that this actually opens the door to the Federal Reserve having a more dovish message on Wednesday?
I don't think that it should open the door to the Fed. Nothing has changed. There's been no data out. The fundamentals and the belief that the Fed is going to hold on Wednesday still applies, and that they are going to hold on Wednesday. And so, about the only thing that's going to possibly change on Wednesday, I hate to say it, is that, they'll hold and then President Trump will disparage them. It'll be a return to pre-pandemic levels like Powell has been hoping for 5 years, except not in the way that he was hoping it would get.
Is there a concern, you think, in the market about Fed independence? Because what you just said there, everyone's expecting Trump to disparage Jay Powell.
No, I don't think there is a big one, because I think that Jay Powell is, got a strong enough backbone that he understands this is going to happen, and he's not going to let it affect the policies that he wants to push forward from here. Now, whether or not that will affect Fed independence on who the next chairman is going to be, because presumably he is not going to appoint Powell, that's an open question. But for the short term, while Powell's still there, I don't think it is.
But don't you think that potentially Trump might start then dishing out some names, and you have this idea of what Scott Bessent, the soon-to-be Treasury Secretary, talked about at one point on the campaign trail as shadow Fed chair?
Yeah, and I've talked about that too, and I think that we're probably going to get a shadow Fed chair. But I think that was going to happen either way, whether or not the Fed, wind up cutting rates or not cutting rates, or wind up having a giant market response, in late January or not. We were going to probably on the road towards getting that shadow Fed chair probably in the spring or summer.
Hey, Jim, appreciate your thoughts. Jim Bianco there of Bianco Research. Jim's talked about that a few times. That's got to be the biggest risk for the Federal Reserve.
Yeah.
For the chair.